Check out the video description for details. It's Wednesday, October 4th. We're going to look at some Sword Art Online news and ROKU today. A little deeper dive in ROKU is its IPO it's now out there, and the other day it popped 30%, then 20% after that. So let's dive right in and get to some Sword Art Online news. We like to follow kind of your cult items that are out there, any kind of pop items that are getting published. Thinking back to The Walking Dead when that was first announced to be a TV series. Sword Art Online is an interesting story where people are trapped in a virtual world. I've seen the first season. It was pretty cool of the anime. Haven't gotten into the second season yet. It's all right. I thought Log Horizon was a little bit better. But they're making a live action TV series out of this, and this is something to keep an eye on. Who picks up this distribution, where it gets shown in the U.S. This could potentially be a blockbuster for someone. It's, if done right, it's certainly a good enough property. There's a ton of them out there that are, but they just kind of need the right treatment on TV. Some of them haven't worked out that well. But this is one that kind of keep an eye on, see who lands everything on it. Could be a good investing opportunity. A lot of fans of it out there. Kind of want to see it done right by the book, but we'll keep an eye on this. Definitely look to this. See where it ends up. Like I said, could be a decent investing opportunity. Watch some of the trailers and things as they come out. See who they cast in it, and so on and so forth. But let's jump right in to ROKU. They were down a little bit yesterday, bounced back up today, up 4%. Pull this up full screen. And I haven't really seen the appeal of it, and I wanted to look more at their financials before I started to really make a decision on it. I understand their business and their product of what they have. So let's look at the initial filing. Didn't look at this when it came out, but obviously after a 30% pop and then some, it's something to look at. And let's just go through a couple of things. Risk factors. This is basically where they lay out everything that could go wrong with the business. And I mean, they have some big ones in here that basically, if you look at their financials, and we'll look at that if we have time here, they've lost money and they continue to operate at losses. And they're growing losses, 244 million in losses. And basically it outlines, like I said, everything that could go wrong with the business. May not be successful in efforts to monetize the streaming platform. So a lot of when they put in here are fairly generic on any of these that you read. Basically if they're not able to grow the business, if their platform, craps out, they just depend on content publishers for their hours. It's an evolving industry. Basically, they poke as many holes as they can in this. So you look as an investor now. If any of these things hang you up, walk away. Don't invest in it. Like I said, a lot of them are pretty straightforward, no matter what company you read it on, and they should be fairly common sense things that would make you walk away. If there's something in here that isn't kind of straightforward in their business, not growing it or whatever, like I said, if you don't like it, simply walk away. Changes in consumer viewing habits. And a lot of companies can write that down as risk for investing in there. Let's see. I'm trying to think if there's anything else on there, but they're trying to monetize their user base, basically with ads. Um, let's see. I'll get to that in their business transaction here. Dividend policy, they're not going to declare a dividend. They don't intend to declare a dividend. I'm not a big fan of that, but companies do it to obviously to grow the company. And if you're losing money, you can't spend it on you know negative dollars on dividends. So um, not too crazy there. The This kind of threw me for a little bit of a loop. It it's very generic what they're going to use the proceeds for, and that's not that uncommon. But you never like to see we can't specify the particular uses of the proceeds. And like I said, it's not that unheard of. Um, Use a portion from acquisitions, investments. It very broad what they're going to use it for, working capital, R&D, things like that. Not so you got to dive into their business plan a little bit more to get an idea of what they're trying to do, what they're trying to work for, and nothing has jumped out. Nothing's jumped out. They've had growth. They like to highlight the areas where they've had growth. It's still losing money. At some point, they've operated for years. At some point, you got to say our goal is to be profitable, for Christ's sakes. Um, they talk about they're going to try and monetize the number of active accounts with advertising. Um, okay, that's great. Um, they do talk. The positive things I can say is they are working on making it a better publishing platform for content providers in their what they have for distribution, ease of publishing and monetization. Um, Again, the flip side to that is, yeah, it's easy and it's a device out there with lots of users. Um, it's easy to publish for Apple and Amazon and Google as well. So, um, I guess you got to look at their user base. Um, 48%. 48% is a pretty large share with the ease of publishing. I mean, that's really what they've got going for them, in my opinion. Um, a lot of people using the box, but it's not, they're not making money. Um, it's large share, but the competition is huge. I still, after looking through all this, and I'll put a link in the video description here. Looking at that, looking at their financials, the losses that they've had, um, I don't. I don't know. You got a near 50% share of the market, and Apple's making money on their devices hand over fist, and you're losing money. It's not, to me, not a great time to invest. Um, it was $14 a share. Price of this video right now is $21 a share. Heck of a return if you got in when it opened, and it was down for a little bit when it first opened up. So there was time to buy it up as it spiked up its 30%. But I just can't. I don't know. I'm not investing in it. I won't invest in it. I'd have to see them become profitable first and foremost. Start there and then see where we're at. Good news is the install base, ease of publishing, getting on there. But man, Amazon, Apple, stiff competition. and like I said, and Apple's making money with it. So um, I like companies that make money, and I'm fairly simple and straightforward with my investing. Um, some you have huge swings on, some you don't. Um, get those dividend dollars is what I say, but very conservative way to invest. Uh, People, ballsier investors, 30% pop with Roku getting in on that. Um, I don't see it, but more power to you. You know, any way you can make a buck, go for it there with investing. As always, post your comments and ideas. Love to hear your thoughts. Give us a thumbs up if you enjoyed it. Subscribe if you haven't already to get the latest investing news for gamers. We'll see you tomorrow. Good luck out there.